Hi, this is James Shrug with Westpac London's end of day report for Friday, the 1st of February. Look, it was a day of pretty decent US economic data today, and that explained the pretty much across the board gains in Northern Hemisphere equity markets overnight, or today. US non-farm payrolls rose 157,000 in January. There were annual revisions which over the past year at least mainly were due to new seasonal adjustment factors on top of the usual previous 2 monthly revisions. Those revisions saw jobs growth in the fourth quarter of last year revised up from an average gain of 151,000 to an average monthly gain of 201,000. So the quarter when the economy apparently shrank slightly in terms of economic growth, GDP, was a quarter of actually very decent jobs growth, accelerating jobs growth relative to the previous couple of quarters, and indeed relative to the January outcome. The separate household survey that they used to calculate the unemployment rate, its jobs measure was up only 17,000 though, and with the labour force increasing by more than that, the unemployment rate actually rose from 7.8 to 7.9% in January. That's its highest since August. The industry breakdown showed jobs rising across the board, except in temp hiring and in the government sector. The factory ISM in January, it rose from 50.2 to 54.7. That's its highest since April last year. So with jobs, orders and the production components all improving in January, that represents a pretty decent run of data for the month so far, with the consumer sentiment number from the University of Michigan in January also being revised up from 71.3 to 73.8. That's still, that now represents a slight rise from the December reading rather than a further decline. December was still down 9 or 10 points though from November. So confidence on this indicator is still quite a bit weaker than it was a couple of months ago, just not as weak as initially reported. And construction spending in America up 0.9% in December. With revisions, that's the 9th consecutive month of gain, and the residential sector very much continuing to drive that. In Europe, we saw the CPI, Euroland CPI, fall from 2.2% to 2%. It's its lowest since late 2010, and very close to the ECB's target of close to but below 2%. A slight downward revision to recent unemployment figures, but still December at an all-time record high of 11.7%. The factory PMI for Europe was revised up a little bit from 47.5 to 47.9. The German number there was revised up by a full point. It's now at 49.8, so just below the neutral level, just a very small contraction there. Compare that to France, unrevised on 42.9, which indicates a steep pace of contraction in the sector. And the UK PMI factory was above 50 for the second month running after a string of sub 50 readings. So that was the data flow today. Most of the movement upwards in equities was related to the US figures on employment, particularly the revisions being so favourable, and the US factory ISM. So in Europe, FTSE up 1.1%. This is about half an hour before the close. The French market up 1.2%. The Germans up 0.7%. The exceptions being Spain and Italy, both down between 1 and 2% today. In New York, the Dow's up exactly 1% at the moment. It's at 13,996, but it was above 14,000 for the first time, I think, since 2007, a little bit earlier today. In commodity markets, we've got, let's see, in commodity markets, in fact, we got rises across the board. That's all you need to know, really. Ranging from, let's see, my printout's not actually showing them. Just one sec. can you just quickly go to CRB and give me copper, gold and oil? Excuse this break, I'm not going to redo the whole video just to get a couple of numbers. Gold at 1669.50 is up 0.4%. Copper on... Got it, yep. Copper up 0.8%, and oil, I would venture, is up 0.2% at $97.64 a barrel. And the Aussie dollar is just above 1.04 against the US dollar. It's been a little bit softer in the last day or so. Okay, that's it for this week. We'll be back again next week.